Its economy has been battered by a plunge in oil prices, but Saudi Arabia is fighting back. The government has announced its 2017 budget, and it contains a plan to dramatically reduce its record budget deficit. But that plan also involves some of the biggest social and economic changes to the kingdom in generations, including taxes on companies hiring foreign workers and encouraging more women to take up jobs. Azhar Sukri has more.
This is the changing face of Saudi Arabia's economy. This job fair for women has been an annual event for the last 4 years, but never has it seen this many job seekers.
Saudi society has changed dramatically. There's a large acceptance of women in the workforce, and families benefit from having women who work, especially in the current global economic climate.
The kingdom is almost entirely reliant on oil for revenues. But after crude prices plunged by almost 50% over the last 2 years, it announced plans to boost income from investments in a diverse range of overseas companies. It also plans a massive sell-off of state assets and measures to reduce subsidies for petrol, electricity and water. Its latest budget is the most detailed financial plan the kingdom has ever released. It says it wants to reduce its budget deficit to $52 billion next year. That's down from a record $98 billion shortfall in 2015 and $79 billion this year. The government will also levy hundreds of dollars in taxes on companies hiring foreign workers. That's to encourage them to hire more Saudis. And it will further raise the price of essentials like petrol, electricity and water over the next 3 years. But to soften the pain of these cuts in subsidies, it'll also give out financial assistance to the poorest Saudis. The government has acknowledged that it is facing a tough economic climate. One analyst says the plan is realistic.
Well, if you look at the numbers, they're predicated on higher oil prices. So now we're talking about a benchmark oil price for the budget of around $50 per barrel, just above $50 per barrel. So if you look at projected revenues compared to previous projections, they're up about 33%. So that's a substantial increase in projected revenues, along with other sources of revenues from various fees and charges.
The government's plan assumes that oil prices stabilise around current levels and that the global economy won't suffer any more shocks in the immediate future. But with a new president in the US and ongoing wars in parts of the Middle East, those assumptions could be severely tested in the years ahead. Azhar Sukri, TRT World.
We're joined now by Azhar Sukri, our senior business producer. Azhar, $53 billion is what Saudi Arabia think they're going to get their deficit down to, from $79 billion this year, $95 billion the year before that. Sounds ambitious, doesn't it?
It is ambitious, but you have to remember the amount of firepower they also have. Don't forget, they've just this year issued the world's biggest ever emerging market sovereign debt. Sovereign bond. They've got another bond issue coming up early next year. The big one, of course, is the big sale of the stake in Saudi Aramco, the state oil company. That could value the company at about $2 trillion. It could raise about $100 billion. It'll be the biggest IPO in history, basically, and it'll be bigger than, Apple, Microsoft, Amazon, all these companies put together. So they've got an awful lot of firepower there. Yes, it is a big ask to get that deficit down. But a lot of people are pretty optimistic that if things stay where they are, in terms of oil prices, in terms of the global risk scenario, then that plan should work.
Let me ask you, how did we get to where we are? Stepping back a bit, was it the low oil prices? What else was involved in the picture that Saudi Arabia is seeing today?
You always have to keep in mind that what Saudi Arabia is facing today is partially its own making. For years, Saudi Arabia was the swing oil producer in the world. It controlled very tightly the amount of oil that was on the global markets. Starting from 2014, faced with a big wave of oil coming from the States, it decided it had to maintain its market share, and it kept on producing oil at record levels. It almost still is. There was a big agreement by OPEC earlier this month, and that should stabilize things, but we'll have to see.
We'll have to see indeed. Azhar, always good to get your thoughts on the kingdom. Thanks very much.